Greetings, everybody. Welcome to Liberty Call. Today is Monday, April 1st, 2023. I am Raymond Dahlman, your humble host. Hope everyone had a fantastical weekend. Not the greatest day for my boys, or not the greatest weekend for my Astros. They lost 2 of 3 to the, who were they playing? Who were they playing last weekend? Oh, the Phillies. God, duh. Anyways, yeah, they did salvage last night's game. Unfortunately, it was on ESPN and I had to listen to those morons talk. I prefer my regular folks that are on the broadcast normally. So anyways, if it's your first time watching Liberty Call, I'm glad you're here. We're going to talk about what happened in today's markets. We're going to go through the weekly update, the market recap, and then one article about Janet Yellen, the dumbest human on the planet, warning us that the U.S. government could default. Oh, no. All right. Well, let's... All right. Well, like I said, if it's your first time watching, please give me some likes, shares, thumbs up, subscribes, follows, all that good stuff. And let's go ahead and jump into the numbers. All righty. The Dow Jones finished the day off down 0.14%, 46 points, closed at 34,051. S&P 500 was flat, down 0.04, closed at 4167. NASDAQ was down 0.11%, closed at 12,212. The VIX was up 1.9% today. It's currently at 1608. Canada was down 0.1%. Brazil was up 1.47. Mexico was up 1.25. In Europe, Germany was up 0.77. UK was up 0.5%. France was up 0.1%. Netherlands up 0.78. Italy. Spain was down 0.79. Italy down 0.3%. Switzerland up 0.66. And Portugal down 0.51. In Russia, the MOEX was down 0.42. The RTSI was up 0.89%. And the overnights in Asia, the Nikkei in Japan was up 0.92%. Australia was, up 0.35%. In China, the Shanghai was up 1.14%. The Shenzhen Component up 1.08%. The China A50 up 0.77%. Hang Seng up 0.27%. And the Taiwan weighted was up 1.09%. All right, so that was everything for trading day 5-1. So hopefully, markets were kind of just flat all day. Earlier today, the NASDAQ and the S&P 500 looked a lot better. The Dow was in the red most of the day. All right, let's go ahead and jump on over to today's weekly economic update. All right, strong earnings from several mega cap technology companies offset renewed regional bank jitters and a weak economic data, leaving stocks higher for the week. The Dow Jones Industrial Average last week was up 0.86%. The S&P 500 was up 0.87%. NASDAQ was up 1.28%, and internationals lost 0.6% for the week. All right, earnings drive rebound. It was a very busy week of earnings reports, but none more important than those of the big tech names. After 2 days of sharp losses on revived regional banking fears and otherwise lackluster earnings results, stocks rallied powerfully on a succession of positive earnings surprises from several mega cap companies. Also aiding the sentiment last week was the first quarter GDP report. Though the report showed muted economic growth that fell short of expectations, investors were encouraged by strong consumer spending. Slowing growth. In a sign that higher rates are slowing economic growth, the first quarter GDP slowed to a 1.1% annualized growth rate as healthy consumer spending helped offset a decline in business investment and a slowdown in non-residential investment. Economists had expected first quarter GDP to come in at 2%. The business inventory investment slowdown reduced the headline GDP number by 2.26%. The initial estimate of GDP was also reported some disappointing inflation news as the quarter-over-quarter personal consumption expenditures price index, the Fed's preferred inflation measure, rose 4.2%, which was higher than the 3.7% forecast. All right, economic data coming out this week. On Monday, today, we have the ISM Manufacturing Index. Tuesday, we have factory orders and the job openings and turnover survey. Wednesday is the FOMC announcement and the Institute for Supply Management Services Index. Thursday, jobless claims, and Friday, the employment situation. Got a bunch of companies reporting earnings this week. Today on Monday, we had Stryker Corporation and ON Semiconductor. Tuesday, we have AMD, Ford, Pfizer, Starbucks, and Marathon. Marathon Petroleum. Wednesday, we have CVS, Qualcomm, Albemarle, and Barrick Gold. Thursday, we have Apple, Block Inc., Shopify, ConocoPhillips, Booking Holdings, Regeneron Pharmaceuticals, and on Friday we have Cigna, EOG Resources, and Dominion Energy. All right, so that's the scoop for the week. Let's jump on over to the market recap for today. Dow slips despite First Republic rescue, Fed meeting eyed. All right, let's see what we have to say here. The Dow Jones Industrial Average closed lower on Monday as investors remain cautious ahead of the Federal Reserve's decision later in the week, while also weighing the government takeover and sale of First Republic Bank to J.P. Morgan. J.P. Morgan Chase rose more than 2% after emerging as the preferred suitor to purchase First Republic, which had been taken over by regulators after the bank failed to secure a rescue deal privately. The move was viewed positively by some as it avoided a messy collapse that could have sparked contagion in the banking system. However, some on Wall Street remain skeptical that the rescue of First Republic marks the end of the wobble in banking as the ongoing inversion yield curve weighs on lending margins. Energy stocks were a drag on the market, led by ExxonMobil after Goldman Sachs downgraded the oil major to neutral from buy, citing, quote, a less compelling valuation, end quote, following multi-year outperformance. Hess, Halliburton, and EQT Corporation were the other energy stocks among the biggest losers on the day. Treasury yields held the bulk of their gains with just a day to go until the Federal Reserve's two-day meeting, with the Fed widely expected to hike interest rates 0.25% on Wednesday. So investors will focus will shift to signaling around a pause in June. Tech traded mixed ahead of Apple's earnings later in the week that could likely shape the direction for big tech. Rising semiconductor stocks also helped keep tech above the flat line following an 8% surge in ON Semiconductor as the chipmaker reported quarterly results that topped Wall Street estimates. All right, so that's everything in the market recap. So not as gloomy as a lot of people would think, but again, not as good as it should be. All right, and then the last article we're going to cover here today, Yellen warns U.S. Could default as soon as June 1st. Oh, no. All right, U.S. Treasury Secretary Janet Yellen has warned that the country may run out of cash and default on its debt payments as early as June 1st if the government fails to raise the debt limit. In a letter to House Speaker McCarthy, Yellen said that the government could not continue to satisfy all its obligations without the necessary funds. Please default. I would love to see the government completely collapse. It would make me laugh. And then all those parasites who suck off the government teat every month would be like, where's my money? I'm like, sorry, go get a job like the rest of us. Let's see here. This warning is earlier than expected, with late July previously considered a potential deadline. Some on Wall Street, such as Goldman Sachs, had expected the debt limit deadline to fall in late July, but the June 1st date is now gaining traction, probably because they didn't get enough tax receipts in April, when at tax time people are holding on to their cash and probably not paying the IRS. I mean, that's what I would do. Let's see here. Efforts to raise the debt ceiling have been delayed by political disagreements, with President Joe Biden making it clear he will not back any legislation that includes significant cuts to domestic programs. Yeah, see, those domestic programs are going away, whether or not it's the government falls apart or you act like grown-ups and say, we can't afford this anymore, and we try to save it on our own. But, I think they're probably going to wait till it falls apart. No one wants to take any responsibility. The House Republicans narrowly passed a bill last week called the Limit, Save, Grow Act, which seeks to raise the debt ceiling while also cutting federal government spending. The U.S. is facing a debt limit of $28.5 trillion, and the situation has been complicated by the coronavirus pandemic, which has significantly increased government spending. Congress suspended the debt limit in August of 2019, but that suspension expired July 31st of 2021. Since then, the Treasury Department has been using extraordinary measures to keep the government funded, but these will only last for a limited time. If the U.S. were to default on its debt payments, it could have significant repercussions for the global economy. It would cause interest rates to spike and reduce the value of the U.S. dollar, leading to a drop in confidence in the country's economic stability. This could result in a significant economic downturn, not just in the U.S., but around the world. Well, see, that's going to happen regardless. I don't think we're going to get out of this without collapsing the dollar and probably collapsing the U.S. government, which, I don't really care about the dollar. I just want to see the federal government fall apart and have all the people in charge jailed and then sent to gulags in Alaska. I think that's the best thing. Are you with me, people? Come on. All right. Well, that's everything I had for today. It's a rather short one. rather short weekly update. So I'm going to go ahead and let you guys go. If you need anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope everyone has a wonderful evening, and I'll talk to you next time. Adios.